Hi, welcome back to Accounting 2. We're in Chapter 13, and we are on our sections Chapter 13, 3, and 4, dealing with reporting and sending our taxes off to the government. We're going to look at 13.3. I don't see us doing a lot of filling out these tax reports. When you go be a payroll clerk or a payroll accountant, you'll have to worry about the exact forms, and by the time you get there, I'm sure some of the forms will change, but the general idea is, as an employer, you're required to furnish a W-2 to each of your employees. And from that, it's going to get your company name, it's going to get the employee's name, it tells them what they've earned and how much has been taken out of their paycheck in taxes for the whole year. This is your job to send to the IRS, and the IRS will then hold on to that. It'll then look for the 1040 tax return coming from, in this case, a Rick E. Selby with whatever this Social Security number is here, and they'll match it up and go, all right, are they telling the same story? Rick has said via his W-4 form, this is how much I think I want taken out in federal income tax and then potentially state. Here's how much we've withheld in social and Medicare, right? It'll then look at our reports and say, hey, did we match that dollar for dollar? And they'll know exactly what they should be looking for from Rick from a tax return. We will also, as an employee, as a corporate company, we will have to file and send these federal income taxes off every 3 months. And again, we're not going to do this in Accounting 2 this year, but just so you know, you would have to do that. You would have to fill out the quarterly tax return, how much you think you're going to pull in, and get that to the government so they have money to operate. So we're not going to cover these. That's why we're going through them pretty quickly. Here again, we're going to have to report our annual taxes that we have come up with, paid, Social Security, Medicare, all of that kind of stuff. So now on to the math that we're actually going to do. We have been, and the picture I like to use is buckets. You know, every 2 weeks or twice a month, we got to pay our people to work for us, salary expense. We actually write checks from the general checkbook to the payroll account to pay them for working for us, right? We now have, or the difference, there's a difference between your salary expense debit and your cash credit. There's a difference between your payroll tax expense, which is a debit, and whatever else it is, taxes, liabilities. So we've been holding these taxes off and putting them in buckets. And at some point in time, we need to take that bucket and dump it out, give those taxes that we have been holding from our employees or matching on our half, we got to send them to the government. We got to write checks for them. Depending on the size of your business, you may have to write them monthly, or you may be able to write them, dump the buckets, if you will, and pay the government the taxes you've been withholding every 3 months, right? Anywhere from 1 to 3 months is your time frame. Depending on the size of your company and the amount of money that you're withholding. That's above our pay grade. We don't care about that. We just periodically need to dump the bucket and send the government the taxes that we have been withholding out of employees' paychecks and our matching of some of those taxes or calculating of unemployment taxes. So I need you on page 385 in the textbook. We're going to not worry about the deposit forms. That's beyond our pay grade. Transaction. Paid cash for liability, right? So paid cash pops up and Hoffman knows he's got to do his job, right? But we're paying the liability, right? We've been holding on to the taxes. We now need to cut the check. So paid cash for the liability, meaning there's a bucket of employee income tax payable with $757 sitting in there. We got to dump that bucket out. We are going to make this liability go to zero, and we're going to make this liability go to zero by doing a debit to employee income tax payable. We have been withholding out of employees' paychecks Social Security, and we have been matching Social Security. So we got a Social Security bucket that we're going to dump out, and we're going to do a debit to Social Security tax payable. We've got a Medicare tax bucket that comes from both us matching and taking from the employee. We're going to have to dump this bucket out. We got to write one big check for $2,547.80 to cover all three of these taxes. All three of these buckets we're going to empty out. So here's our journal entry. This is why it is a debit to the liabilities, because we're paying those liabilities, right? Just like when you would pay cash on account, you would see accounts payable go down, right? Debit to accounts payable. We're paying off the amount of money we owe somebody else, and we write out one check. Well, now we're writing out one check and sending this amount of taxes to the IRS. They'll go ahead and figure this portion and send the Social and Medicare to their own places, right? So just like any old cash payment entry, write the date, write the accounts of the three debits, write the check number, 347, plug in your debit amounts. We got three of them here. Go ahead and write in your cash credit. Now, unemployment check is going to go to a different department, so we got to write a different check. But it's really the same thing. We're going to see the words paid cash for liability, right? Paid cash liability, dump the bucket out. We've been withholding out of our own company funds, or calculating out of our own company funds, federal unemployment for all those people that have earned less than $7,000 per year. We got to cut a check to this level of government for almost $35. So again, cash payment entry, date, unemployment tax payable federal. We're setting the liability to zero. Write the check. So there's our T account. Look at it. Date, account, check amount, do the debit, do the credit. Doing the same thing for state. Paid cash, liability. State unemployment for us obviously is going to go to Minnesota, so same deal. Plug in your date, your account debited, your check number, debit amount, check amount. We're going to ignore the look back period. That's above our pay grade. We don't need to worry about that. So as we look, we've done three things as far as journalizing payroll. We have done employee payroll, paid cash for semi-monthly payroll, and you found that transaction on page 371. We then would do employer payroll, right? We paid our employees. Now we got to match dollar for dollar Social and Medicare. We got to calculate how much we got to come up with on unemployment. Unemployment transactions, again, 13.2 employer payroll. That's on page 376. Over time, we got to go ahead and dump the buckets, and that is paid cash for liability. That's on page 385 and 387. So those are our three sets of transactions for our Chapter 13 journalizing payroll.